Hello, this is Brian Resney, President of Resney Wealth Management. I'm here to bring you an important update about the economy and the investment market so you can better understand what we see in the global landscape and also how we're currently positioned and what we see for the near-term changes within client portfolios. We continue to see information that's coming out not only in the U.S., but also around the world that is, again, slowing, and that would probably be the best signs that I would see. Or the best way to explain it. China's numbers on not only on their manufacturing but export side continues to get weaker and weaker. In fact, many people were talking about a soft landing or retraction for China just 3-4 months ago, and now we're having talks of a hard landing where maybe their GDP comes in substantially lower than that 7.5%, maybe in the 4 to 5% range. That would obviously have a huge impact not only on our investment markets but the world economy, since Japan is the second largest economy next to ours. Third would be obviously all of Europe. What we're seeing over in Europe is the numbers keep getting worse and worse. In fact, I look at Spain, and some of the numbers coming out of the Spain banking system have been some of the worst outflows of capital coming out of Spanish banks that we've ever seen. And what this basically tells you is Spain at some point is going to have to ask for a full-scale bailout, whether it's next week or 6 months from now. That's really hard to tell. But at the end of the day, Spain is literally falling apart, and so is Greece. They're getting worse. Italy is starting to obviously hemorrhage worse than they have been in the recent 6 to 12 month period. And also Germany's economy is slowing greatly, which was really the 800-pound gorilla over in the Eurozone. So while we see recessions overseas and obviously most of the Eurozone, now Germany looks like they're going to join that obviously party in a recession. We see China slowing substantially. GDP numbers, first revision anyway, came out this morning at 1.7, which is meaning we're running at an annual rate this year of about 1.7% GDP growth. A little bit better than the 1.5 initial that came out last month. But again, what we're seeing, generally speaking, is a slow economy in the U.S. Ultimately, we are not immune from the world economic situation. And if the emerging markets continue to slow, that will push us further into a recessionary territory. Our economy has slowed greatly from last year, and actually from the jump we saw from the lows back in 2009, from the Great really Depression or the Great Recession, however you want to put it, that we had from the credit crisis. What our government continues to do and what Europe continues to do is basically print more counterfeit money on more counterfeit money on more counterfeit money in order to pay down debt that they couldn't pay in the first place, which obviously is a reason why we've got this slow economic growth or retraction, depending which countries you look at. Now, we look at our global tactical opportunity portfolio. We're lagging the S&P year to date because we've gone more conservative, because that's what basically our portfolio is designed to do, is kind of front run. Now what we're seeing is, based upon our relative strength, is we will probably add back a few more equities if things stay balanced through the end of this month, sometime around Tuesday after the first day of the next month, which is September coming up. What we're basically seeing is hopes that the Fed will come out with more QE when we have our talk with Jackson Hole and Bernanke on Friday. And ultimately, the fiscal cliff has been talked about a lot. The fiscal cliff basically is all these tax breaks that have been given out over the last decade or so with Bush, and then extended obviously with the Obama administration. And what's really going to happen with that? Some of the numbers we've seen is a 4% retraction in GDP if, in fact, all these numbers are taken away, or these reductions in taxes are taken away. I don't think that's going to happen. I think at some point, and it may be late in the game before it happens, but I think hopefully our politicians will actually address some of these situations before it gets too late. Although from past experiences, our government usually is a day late and a dollar short to most of these parties, and that's usually after things have sold off, we have further contraction in the economy. We'll keep our fingers crossed this time to see really what our government's going to do. We're going to run our global tactical opportunity portfolio. We run our strict strategy, and the reason we do that is simple. It will keep us out of major trouble if in fact we get a major correction in this market from a recession, if it continues to get worse over in Europe, if it continues to get worse over in the emerging markets. We are not immune, as I made a comment earlier. We will in fact slow our economy greatly, and the world economy is all tied as one. We again cannot isolate ourselves away from emerging market economies, which are greatly growing and much bigger than they were 10 and 20 years ago. And we certainly can't escape a euro crisis at the depths that we're currently seeing. So again, we're going to watch our indicators closely. We'll make changes to our global tactical as necessary. And again, we're not worried about day by day or week by week or month by month. But we're looking at that rolling 1 and 3 year average to really keep in the right direction. Now, while we're constructive on our portfolio and we believe we're well positioned, our portfolio structure is that of reduced risk in severe down markets and upside potential when things are ultimately good. If you have questions about your portfolio, of course, call the office. If you're a client, we'd love to talk to you. If you're not a client and you want to talk to us about becoming a client, call the office for a consultation. We always like talking to new people who are nice and want to improve the quality of their life and, of course, the quality of their portfolio. Until Sunday's show, make sure you have yourself an extremely profitable week. We will be monitoring Jackson Hole closely on Friday, and we'll give you an update next week exactly what we're seeing and also what changes will be made in our global tactical opportunity portfolio across the board for every client come Tuesday. Have a great weekend and a great Labor Day.